Good day, Junior Techies. I'm Mrs. Brimacombe. We are going to look at Chapter 11, Activity 3. The information was extracted from the accounting records of Tule Traders, a registered VAT vendor for March 2022. The annual turnover is $350,000. The business uses a markup of 80% on cost. A reminder. A business must register as a VAT vendor. It's compulsory if their annual turnover is more than 1 million. If their annual turnover is less than 1 million and more than 50,000, they can volunteer to register. So in this case, this business chose to volunteer to register as a VAT vendor. So how would this benefit her? If you are a registered VAT vendor, you would be able to claim back VAT on all items purchased and expenses incurred. If you are not VAT registered, you still have to pay VAT on your purchases but are unable to reclaim it. Small businesses can give the appearance of bigger and more established. Once you have a VAT number, nobody will be able to easily tell if your business turnover exceeds the VAT registration threshold. So this is how this could benefit you as a business if you do choose to decide to register as a VAT vendor. Question 3.2. Analyze the transactions according to the accounting equation. Include the effect on VAT input and VAT output. So if we look at the first transaction, trading stock was purchased on credit for $36,000, VAT exclusive. To find out the VAT amount, we have to take the VAT exclusive amount, which is $36,000, times 15%. Because trading stock was purchased on credit, it means we need to open creditors control, trading stock and VAT input. Starting with the VAT exclusive amount, creditors control is going to be credited, trading stock is going to be debited. A reminder, the trading stock account reflects the amount excluding VAT. To show the VAT amount, it means that creditors control will be credited and account debited VAT input. On my accounting equation, we're going to have account debited, VAT input, account credited, creditors control, assets plus 5,400, liabilities plus 5,400. So on my accounting equation, I'm first going to indicate the amount excluding that, and then I'm going to show the VAT amount. Question 2 or transaction number 2, 0 rated items sold for cash. The cost is 18,800. What is very important to understand here, it's 0 rated. So that is charged but at 0%. This means that we need to open, because we sold goods for cash, we need to show the selling price in bank and sales, and we need to show the cost in trading stock and in cost of sales. If you look at the accounting equation, we need to show the influence that this will have on the owner's equity. So it is very important that you understand income will have an effect on the owner's equity. Cost of sales will have an effect on the owner's equity. To show the selling price, it was not given. The selling price will go into bank and sales. They provided you with the cost. So that's why I'm starting with trading stock is credited with the cost 18,800 and cost of sales is going to be debited. The business uses a markup of 80% on cost, which means to calculate my selling price, we need to take the cost times 180 divided by 100. Bank will then be debited and sales will be credited. So on my accounting equation, we first start with the selling price, which means account debited bank, account credited, sales, assets plus 33,840 and owner's equity plus 33,840. Because my income increases, it will have a positive effect. To show the cost of sales is debited, trading stock is credited, assets minus 18,800 because my trading stock will decrease, and owner's equity, because my expense increase, it will have a negative effect on the owner's equity. Transaction number 3, sold goods on credit for 72,450, including VAT. So to find out the amount excluding VAT, we have to say times 100 divided by 115. To find the VAT amount, we've got different options now. But if I'm using the amount including VAT, to find the VAT amount, we're going to say times 15 divided by 115. So goods were sold on credit, which means that there is a selling price and there's a cost price involved. To show the selling price and the cost, we need to open debtors control and sales. To show the cost, we're going to open trading stock and cost of sales. Now, very important. Goods were sold on credit, which means that VAT will be collected. If VAT is collected, that money is owed to SARS. This is why we need to open VAT output. Starting now with the selling price excluding VAT. It means that debtors control will be debited and sales will be credited with 63,000. To show the VAT amount, before we go to the VAT amount on the accounting equation, account debit, debtors control, account credit, sales, assets and owner's equity will be plus 36,000. Because my income increase, it will have a positive effect. Now we can go on to the VAT amount. To show the VAT amount, debtors control is debited, account credited, VAT output. On my accounting equation, we're going to show account debit, debtors control, account credit, VAT output, assets plus 9,450 and liabilities plus 9,450. If you add those two together, it will equal the total amount, which will include the VAT amount. Now we're not done yet. We still have to show our cost. A very, very, very important point. When you're calculating your cost, it is always calculated on the selling price excluding VAT. Please make sure that you remember that. This means that we are going to take 63,000, which is the selling price excluding VAT, times 100 divided by 180 because we want to know what is the cost. Trading stock will be credited, account debited, cost of sales was 35,000. And now we need to show that on our accounting equation, account debit, cost of sales, account credit, trading stock, assets minus owner's equity minus, and the total amount is 35,000. Transaction number 4. Paid the monthly water and electricity bill electronically. The total charges amount to 3,100 excluding VAT. To find out the VAT amount, we need to say 3,100 times 15%, which means 15 divided by 100. Because a payment was made, we need to open bank. What did we pay? Water, electricity. And now we also need to open up VAT input. It was items purchased, expenses incurred, so we are entitled to claim that VAT. This is why we're opening up that input. Starting with the amount excluding VAT, it means that bank will be credited with 3,100, which was given, and the water and electricity will be debited. Your assets will be minus 3,100. Because my expense increased, it will have a negative effect on your owner's equity. To show the VAT amount, we're going to credit bank, account debited, VAT input. Again, if I add those two, I will pay the total water and electricity bill, which will include the VAT amount. But when we're showing this on the accounting equation, we are showing it separately. Effect on my assets, minus, plus 465. Why? That input is regarded as an asset and bank as an asset. They did not indicate that the business has a bank overdraft. And this is why we say it's regarded as a current asset. Owner's equity, liabilities, nothing. Transaction 5, bought laptops on credit. The VAT amount charged was 3,900. So here they provided you with the VAT amount. But I still need to show that I've purchased laptops, which is regarded or shown as equipment. I need to indicate that. And what was the cost of that? The purchase price, excluding VAT. So to find out the amount excluding VAT, we need to take 3,900 times 100 divided by 15. Reminder, the VAT amount was given. So the total purchase price on credit for these laptops were 26,000. Now we need to open up creditors control because we bought on credit, we bought equipment, and now because we are registered as a VAT vendor, we are entitled to claim that VAT on the items purchased. This is why we're opening up VAT input. To start with the amount excluding VAT, creditors control is credited, equipment will be debited with 26,000. Effect on my accounting equation, assets plus 26,000, liabilities plus 26,000. To show the VAT amount, creditors control is credited with 3,900. VAT input is debited. On my accounting equation, assets plus 3,900, liabilities plus 3,900. Transaction number 6. Paid 10,143 to a supplier in part settlement of account. So we paid our supplier in part settlement of our account and we received a 10% discount. So here's a lot of things that you need to remember now. First of all, we paid 10,143. That will be including VAT. This will also reflect the amount after the 10% discount, which makes this calculation a little bit more complicated. So where do we start? If we look at bank, a payment was made. It means that my bank account will be credited and creditors control will be debited. This again is including the VAT amount. On my accounting equation, we would have assets minus, because a payment was made, liabilities minus. But now we need to still show the discount that was received. It was 10%. To find out the discount received, 10% discount was received, so the total debt is equal to 100%. If 10% discount was received, it means that we made a payment which equaled 90% of the total outstanding debt. To find out the discount received, we have to take times 10, the amount that we've paid, times 10 divided by 90. Again, all of this is including VAT. Discount received will be credited. So on my accounting equation, account debited is creditors control, account credited, discount received, owner's equity plus liabilities minus 1,127. Now, another very important point to remember. Because discount was received, we now need to make an adjustment with regards to our VAT input. Why? Because when we purchase goods on credit, we would have said, what was the total amount that we owe our supplier? Which means creditors control would have been credited and VAT input would have been debited. But now, because we are paying less, we need to make an adjustment with our VAT input because the amount is going to be less. This is why we need to open up VAT input. So to find out what is the VAT amount, we are going to take the discount received, which is including VAT, times 15 divided by 115 to find out the VAT amount, which means VAT input will be credited and discount received will be debited. Please take note that you've got another way in which you can illustrate this. This can be done directly in your creditors control account. So in other words, in your creditors control account, you would then show the discount received excluding VAT, and VAT input would be shown the VAT amount in your creditors control account. Now, irrelevant if I decide to do it directly in the creditors control account or in the discount received, that input would still be credited. If we do it directly in the creditors control account, my details would be creditors control. We've done it now in discount received. We took out the VAT amount, where to input VAT. So on my accounting equation, account debited, discount received, account credited, VAT input. Because VAT input is credited, it means our assets will decrease. Because discount received is debited, my income will now have a negative effect on my owner's equity. Before we continue with the next transaction, just to indicate, this will be similar when we've received money from our debtors and we provided them with discount allowed. When the debtor makes a payment, nothing happens with your VAT output. The only time we need to make an adjustment in our VAT output is when discount was allowed. The same here. When we paid our suppliers, and let's say no discount was received, we would have simply said bank is credited and the creditors control is debited. But because discount was received, we needed to show the discount received and we needed to make an adjustment with the VAT input. Transaction number 7, issued a credit note to a debtor for unwanted stock returned 1,035 inclusive of that. So we've received the stock back. This is important to remember because if we got the stock back, we need to calculate the cost. We now have the selling price involved and the cost price. To find out the amount excluding that, we have to say times 100 divided by 115. To find out the VAT amount, we can take the amount including VAT times 15 divided by 115. You could have also said the amount including minus the excluding VAT. Once you've calculated that, it will provide you with exactly the same amount. Starting now with the selling price. The amount excluding VAT. It means that debtors control is going to be credited and debtors allowances is debited. Those debtors owe me less money or that specific debtor. On my accounting equation, assets minus, because debtors control decreased, owner's equity minus, because my expense increased, it has a negative effect on the owner's equity. To show the VAT amount, debtors control is credited and VAT output is debited. Why? When we sold goods on credit, it means that that money was owed to SARS. The money that we expect to collect is owed to SARS. Why do I say expect? If we're selling on credit, invoice-based, we are liable to pay over that money to SARS. But now that customer returned the items, which means we're no longer liable to pay over that money to SARS. That's why that output will now be debited. Account credited, the debtors control. Assets minus 135, liabilities minus 135. But we're not done yet. Because we got the items back, we need to show that our trading stock, we got it back, and cost of sales will now decrease. Very important again, to calculate the cost of sales, we need to use the selling price excluding VAT, which means we need to use the 900 times 100 divided by 180. Cost of sales will now be credited and trading stock will now be debited. The effect on the accounting equation would be assets plus owner's equity plus 500, and nothing happens with your liabilities. Transaction number 8. The owner took goods marked 5,382. This was VAT inclusive for personal use. Now the first thing that you need to remember, when the owner takes for personal use, anything that he takes from the business will always be at cost. So now they provided you with the selling price, but not only the selling price excluding VAT, the selling price inclusive of VAT, which makes this a bit more complicated. So where do we start? We start by calculating what is the amount excluding VAT. Why do I need the amount excluding VAT? Because the cost must be calculated on the selling price excluding VAT. So this is our first step. What is the amount excluding VAT? Once we've calculated that, we can find out our cost by taking the selling price excluding VAT times 100 divided by 180. That will equal our cost. But now you need to also remember, when we purchase that stock, that trading stock, we said on items purchased, VAT input will be debited. We're claiming back that VAT. We're getting a reduction in the amount that we owe SARS. But now I'm not going to sell those goods. These goods are taken for personal use. So if it's taken for personal use, I cannot claim that VAT. I cannot get a reduction in my VAT. So we need to now make an adjustment. That money is actually, that VAT is owed to SARS. So this is why we need to work out the VAT amount on 2,600. So we're going to say 2,600 times 15 divided by 100. Starting now with drawings, it's an owner's equity, trading stock, an asset, and VAT output. If we look at drawings to show the amount excluding VAT, actually to show the cost, because we don't care about the selling price. We need to show what is the cost. Drawings will be debited with 2,600 and trading stock will be credited. Effect on the accounting equation, assets minus 2,600, owner's equity minus 2,600. To show the VAT amount, drawings is debited and VAT output is going to be credited. Effect on accounting equation, owner's equity minus 390 and liabilities plus. Please take note that drawings can also be shown in my VAT input instead of VAT output. So when we show it in our VAT input, it means that VAT input will be credited. So irrelevant if VAT input is credited or VAT output is credited, essentially what is happening, that money is owed to SARS. Question 3.3 asks of you now to calculate the amount payable to or receivable from SARS. So what I've done, when you get this type of questions, there are different ways in which you can get to the answer. You can draw the VAT control account, the T account, if you would like to. You can sort it out, all the VAT output and all the VAT input, and then do your calculations. If it's asked of you in this type of way, just by saying calculate, it's up to you. How do you want to get to the answer? So I'm going to start by looking at now all the transactions which we've done on the accounting equation. So transaction number 1, VAT input was plus 5,400, which means I'm going to indicate VAT input plus 5,400. A reminder, transaction number 2 was 0 rated, so this will not be included in this calculation. The third transaction, we had the VAT output, which means that our liabilities were plus, so I'm going to indicate under VAT output plus 9,450. Transaction number 4, VAT input plus 465. Transaction number 5, VAT input plus 3,900. Transaction number 6, VAT input minus 147. Transaction number 7, VAT output minus 135. Transaction number 8, we have the VAT output again plus 390. Once we've taken all the transactions from the accounting equation, so we looked at where do we see where VAT output and VAT input was involved. Did we need to add or did we need to subtract? We can now total VAT output and VAT input. To calculate receivable or payable, remember that there was a balance owing to SARS on the 1st of March 2022 in respect of VAT 3,300. This means that our opening balance plus VAT output minus VAT input equals the amount payable to SARS. Alternatively, you could have indicated this just the amounts by saying plus or minus, and you will end up getting exactly the same answer. So 3,387 is payable to SARS. Question 3.4. What internal auditing measures are undertaken to ensure that VAT is calculated accurately? It is so important in a business that they get this 100% correct. If SARS comes and does an audit, you need to make sure that everything is in place and done correctly. So evaluate the accuracy, completeness, and validity of the accounting process for VAT. So in other words, we need to check that everything is done and completely done. Confirm that the payment on the invoice matches the information in the tax processing system and that the correct calculations of the VAT has been processed. All expenditure related to invoices are reviewed and that input tax is reclaimed by the business. Ensure that the correct collections of VAT has taken place. Ensure that the VAT 201 form is completed correctly. So these are internal auditing measures that a business can do to make sure that it's done correctly. Question 3.5. Julie Traders buys trading stock from Malcolm suppliers regularly. Malcolm suppliers offered you goods that would normally cost you $17,215, including that, at a special price of $12,000, provided that you pay cash and do not require a document. What concerns would you have regarding the non-payment of VAT? This is unethical. Non-payment of VAT is regarded as theft. Would you accept this offer? Explain briefly. No, under no circumstances. This is regarded as tax evasion and is unlawful. It is a criminal offence and punishable by law. The business could face legal consequences. Thank you very much. I want to leave you with this quote. Mistakes are proof that you are trying. Next, we're going to look at activity 4. Have a wonderful day.